stocks tumbled today and then came roaring back. They still closed down. We got Jonathan Cheng joining us now on the set. Thanks, Jonathan.
Afternoon.
So it was the big board was down about 101 points. We're getting near the settlement price there. 12,721 was the close to the close, and the Nasdaq down about 1.2%. So there really was a tumble and then a rebound. What happened?
Well, I think the argument that a lot of investors have been making lately is that when you look at the world and you look at the troubles, especially in Europe today, the U.S. starts to look a lot better in contrast. You probably don't want to be holding the euro these days. If you don't hold the euro, you can either go into currencies like the Swedish krona or the Australian dollar, but a lot of that money is coming to the U.S. dollar. When it comes to the U.S. dollar, it goes to places like the S&P 500, like the Dow Jones Industrial Average. So obviously, we're going to take a hit here.
So less worse.
Less worse.
Less worse is what
yes,
you're saying.
right.
We're the least dirty shirt in the bag of filthy clothing.
And you look at last year's performance, it's a perfect example. You could see Europe and Asia were down 20% or so. The U.S. was 0%. That's not great, but hey, it's 20% better than the rest of the world.
Well, and that may be true. But hearing that Europe's problems are worse than America's problems, that sounds on the face of it fine, but let's back up a bit and say, well,
right.
Europe is the world's biggest trading bloc, bigger than the US, which is the biggest economy because it's a country. How can we be immune from that? How can we possibly hide?
Right, and we're not immune. That's the answer. But we have seen, it is corporate earnings season, and we do see that U.S. companies are able to still squeeze out a little more profit, even though revenues are taking a hit because of Europe and all the uncertainty there. Now, again, that's not to say that earnings are going to be great, but the earnings do, jibe with this picture that we have here in the U.S. and our domestic economy, that things aren't great, but we're chugging along bit by bit, and again, you stack that next to Europe, you stack that next to Asia, and it's a good place to be.
I'll take the least worst example of that. So the cost of borrowing for our government, the U.S. government, has dipped to an all-time low.
That's right.
At all points, at all borrowing lengths. Tell us about that.
Well, we've clearly seen Treasurys, and that it's seen as a safe haven, and people flee to it every time they get worried about the world. And we've seen projections, so we've seen people saying it could go to 1.5. Well, we've now smashed through that. I haven't heard anyone say 1.0 yet, but we're quickly headed in that direction.
I will say 1.25 because I said 1.4 and we got there, and we did indeed. And I think I say that not as a secular thing, but as a cyclical thing. And I think if we slow down much more, then I think we get there.
Right, and that just reflects that bond investors in general have been more cautious throughout this entire recovery, or whatever you want to call it, the past 2 or 3 years. They've been a lot more skeptical about any rebounds that we've had, and when things start to look a little icky, they're the first ones to run for the door.
Yes, they've done some research is what I would say.